So we're back for the big event bonus session with Kate Rezabek. We're keeping current matters. It's amazing timing. We were just laughing about it. Yesterday was a big day in the market. And one of the things we thought about after the big event was it would be really cool to come back and kind of look back at the forecast we're making, look at the market, see what's changed. We had a big deal with NAR. We've got market shifts going on, and just a lot is happening here. So Kate graciously decided, agreed to come back and kind of share what she's seeing and what Keeping Current Matters is doing. And so thank you, Kate, for coming on here and sharing with us. We are recording this session. For those of you that wonder, we're going to post it on the website. It's thebigeventdfw.com. You'll see the recordings of the other bonus sessions that we're doing on there. And then, next month, we're having Chelsea Pites come on here. So that's going to be a big deal. She's going to be great. And we're keeping this thing going. And we're leading up to next year's big event again. So, Kate, thanks for being here. I'm going to turn it over to you and let you kind of give us this market update. I know there's going to be questions at the end. Pete Montesino is going to kind of help moderate those questions at the end, and then kind of wrap us up, if you will. So thank you.
Perfect. You got it. Thank you for the introduction, John. It is a pleasure to be here again. We were just saying a moment ago, so much has changed in the housing market since we chatted in January. So the timing of being back here is really, really exciting today. And I can't wait to bring you the latest updates that we have. That we joke around that the blessing and the curse of our name is Keeping Current Matters. Man, we are doing our best to stay current for you right now with all that's happening. So I'm going to go ahead and share my screen, and then we can jump right in. All right. John, can you see that okay?
Yeah, we got it.
Okay. Perfect. Like I said, so much has changed in the housing market since we talked in January, and the best thing that we can do is bring you the most current information. We talked about seizing the opportunity or getting left behind. I think that there are still massive opportunities in the 2024 housing market, and really the game changer is going to be how agents step up, how they fill that space with that relevant market opinion based upon facts, and be able to have meaningful, valuable conversations with their clients. So we're going to go through all of that. I'm going to show you in a moment the topics we're going to cover today, but take notes, take screenshots, pictures, all the good stuff, and we'll go from there. So as a reminder, hold on. There we go. If you didn't get a chance to check out Keeping Current Matters after the big event, I'm pulling this code back up here. So you can have essentially 45 days at this point of free access to KCM. You get, 2 weeks free of all the different things we offer, from blogs to infographics to market updates, buyer and seller guides, everything you would need to crush the spring market, even our video app that helps you put context in your content. And I know Chelsea talked about that so much. So if you've been doing videos without this opportunity, I want you to go ahead and grab a free trial of KCM before you leave here today. And that'll give you everything you need really to help prove your value as an agent in the market right now. And we know that over the past few weeks in particular, that has become more and more important than ever. So we're going to give you all the resources to be able to do that. And I hope that you take an opportunity to check it all out and let us know if you have questions. We want to help you get the most out of KCM. As a reminder, we are a housing market data and insight company. So we are bringing all of the information, all the data, all the expert quotes, all the research. Our expert research team is pulling that all together and making it simple and easy to understand to save you time. I know you don't have a ton of time to be out there, doing all the reading, doing all the research. You've got plenty of other things on your plate. So we do that for you. So it's easy to understand, and it's simple and effective for you to share out with your clients. So they see you as the market expert, whether that's through video, through social media tools, through market insights. It's all there for you. So you're the market expert. So check that out. I'm going to bring this code back up at the end, so you have one more opportunity to do that. And let's dive right in. So what we will cover today, I left you in January with a 90-day work plan. I want to check in on that and see how you're doing, just as a reminder of, hey, here's the things we said we were going to work on. I hope that you worked on them, and then we'll give you more to think about today. We're going to talk again about how facts alleviate fear and how that has shifted even more so since the NAR settlement came out a few weeks ago, and people have more and more questions about the value of an agent, what they've heard, what's really happening. So we're going to talk about how facts help alleviate fear. And then I'm going to give you the two biggest questions or conversations that you need to be having right now with your clients. One for sellers, which is leveraging their equity and making sure they know how much equity they have. One for buyers, which is mortgage rates. That's the big one today. And then the impact on the housing market for this year. So what do those two things have as an impact on the market, and what do we see going forward? So hot off the press, we've got all this stuff for you this morning. But before we do, let's check in on the 90-day work plan. So one of the things that I asked you to do in January was become a data-driven expert and stay current. More and more important than ever that you are staying current, because it's not just about communicating the data to your clients. It's helping them understand what's happening right now and how does it affect their plans to buy or sell, or to make a confident decision. People want to know why. And if you're able to explain why and connect the dots like we do here at KCM, then you're going to be that data-driven expert. You're going to show your value and be able to stay current for your clients, because things are moving and shaking and we're bringing it all for you. Stay focused. This is an election year. There's going to continue to be a lot of chatter about the election and that impact on the housing market. So make sure that you don't get distracted from what your clients really need to know, whether that's about prices or mortgage rates or inventory or whatever's happening in your market, how you can be the true expert for them. Well, they're going to be distracted from a lot of noise, a lot of misleading headlines, a lot of things that are going to take the focus away from the market and your ability to serve your clients. Help your sphere understand how much equity they have. We mentioned this as part of the 90-day plan when we were together in January, for those of you who were there. Today, I'm going to go a little bit deeper on it, so you have some really solid visuals, slides, and tools to be able to share with your clients about how much equity they really have. People don't understand this fully right now, and to be able to communicate that makes you the expert. That starts to kind of tip the dominoes of listings coming to the market, of people making moves, of all those great things. Prospect, prospect, prospect. We talked about making sure that you are getting out there and having conversations. I'm sure you've been doing this. I'm going to give you two more big ones to have when we leave here today. And then work with a trusted lender. You know, Service First has everything that you need and the trusted lenders that you need to be working with. The question I asked for you when I was on stage was, don't leave here until you have that partnership solidified, until you've met some more people that you can network with, introduce your clients to, give them options for. But having a trusted lender right now in this market, more important than ever. You need that partner who's going to help you not only guide your clients, but that handoff of understanding the market the way you understand the market, so your client is very well cared for throughout the entire process. All of that is mission critical for sure. And then use clear, simple, and effective messaging. This is so important today. I'm going to share some visuals with you, some that you've seen before and some that are new today. And to be able to take the visuals, put them in your social media, put them in your buyer presentations, your listing presentations, all those different things will help your clients not just hear what's happening, but see it and understand it. And remember, your ability to explain what's happening in the market is what's going to be the game changer. And it's about driving that forward, using the visuals to make that happen. So this is what I asked you to do. I know that's a lot over 90 days, but hopefully it gave you a point or two to focus on. And that you'll continue to do this through the spring market, because, you know, things are heating up right now, but at the same time, we've got a ways to go throughout the spring market, the summer, you know, the rest of the year. So continuing to be consistent And these fundamental things, really, really important. We're going to add to that today, making sure that you are presenting your value. All right, so you may remember the question that I asked you at the beginning of our session in January. I asked you to write this down, and hopefully you did, and hopefully you went back to your notes and really instilled this, because it's gotten even more important. And that is, do I have a relevant market opinion based upon facts? And I asked you this because there's a lot of people making a lot of noise in the housing market. It's distracting, but if it's easy for your clients to understand, they're going to listen to it. They're going to gravitate towards it. And they need to be hearing from you what the truth is, what the reality is, how things are really happening in the housing market. Because you need to be the educator more than ever. Right now, we are sitting in a time and space where, we mentioned a moment ago, the NAR settlement came out, and people have heard everything across the board. They don't know who to turn to. It's instilled a lot of fear among agents. There's fear among consumers. Consumers might not be quite tied to it as much as agents are, but either way, they're hearing things like anything from I never have to use an agent again to I don't have to pay a commission. And we know that none of that is true. However, people have interpretations about what's happening. And what I want you to be able to do is not get distracted by that. When it comes to how the legalities work and what your brokerage needs to do, I need you to work with your brokerage to figure out all of, the elements of what does this mean for the business? How do I need to operate differently? But the one thing that I can tell you that you can do right now, and you can do in any market, no matter what is happening. This will help you rise to the top, and that is to be the educator. Bring the facts that alleviate fear, right? We talked about that so much. Facts alleviate fear. And if you can present your value as the market expert who's staying up to date on what's happening, what it means for my clients, prices, rates, inventory, equity, all of those different things. If you are proving that value every day, people are going to want to work with you. People are going to turn to you when they're ready to buy. So if you have fears about the housing market, about the settlement, I understand that, absolutely. But I want you to really focus on being the educator, because that's going to be your differentiator. It's everything we talked about in January, and it's everything we're going to revisit and we're going to amplify today. And I say that because I want to share this quote from 1000 Watt. And it says, our recent research at 1000 Watt tells us that consumer sentiment on this issue is malleable and volatile. I'm going to go back to those two words. People have just been blitzed with NAR agrees to slash commissions headlines that may ignite mass consumer price sensitivity. But behavioral inertia is strong, and it's a long way from a headline to the very personal and very serious decision to get help buying a home. So what does this mean? It means things are all over the place right now. People don't know where to turn. They're not sure what to do. But what do we know? That consumer sentiment right now is malleable, meaning it can be changed, and it's volatile. It's like I said, they've heard everything from, I don't need to use an agent to, I don't need to pay commissions. And what I want you to remember is that you are valued and people are going to turn to you. And I'm going to show you that in just a moment. But if you bring the facts that alleviate fear, people are going to want to work with you. And that is mission critical. So, your job is to be able to deliver the facts, be able to be that market expert, that educator for your clients, because people are looking for good advice. As I mentioned a moment ago, this is a great piece that we got from the Northern Virginia Association of Realtors. They did a study with Bright MLS, and it says, which of the following statements do you agree with most? And what this study found is that 76% of people agree when you buy a home, you should definitely have someone who represents your interest during the whole process. Right now, people are still looking for you. This is a flight to quality where buyers, sellers alike, they need expert advice. They need to go through the transaction with someone who can help them, and they are willing to pay for it. And this data shows, this is a very recent survey, shows that that is still true. And I want you to remember that. as you go through the next weeks and months, as kind of the dust settles, the best thing you can do in this moment is step up and be that educator and fill that space with knowledge and expertise that people will turn to. Because 91% of respondents in this study also say it would be very stressful to navigate the home buying process without a real estate agent or broker. And 87% say a real estate agent or broker is an essential, trusted advisor. People are looking for you. They're going to continue to look for you. And the agents who succeed in this moment are going to be the ones who show their value, who are transparent, who are real and open, as we call it at KCM, who are presenting value as the market expert, because that's what people are looking for. And your opportunity to do that right now, this is the opportunity in this market as we're, figuring out how everything else is settling, just rise above as the educator on what's happening in Dallas, what's happening in Texas, what's happening throughout the country. We talk about national and local insights when we do these presentations because your clients are seeing what's on the news and they're confused based on what's on the news, which is oftentimes national data. But we want you to also be the market expert in your area as well. So bringing those things together, connecting the dots and being able to explain it is kind of your game changer right now. Because I showed you this before. I said most agents know what's happening. They know what's happening with prices, rates, all those things. Good agents understand it, and great agents can explain it. And the agents who can explain it, who can truly be the game changers, are the ones who are going to thrive through the rest of the spring, through the rest of the year, and for many, many years beyond. So really focusing in on being the expert who can explain what's happening is so important. And that's why I want to go through these next two conversations with you that are really the most critical things that you can do today to be that expert. And the first one is on the seller side. Your sellers have more equity to leverage than ever, and you want to make sure that they understand this, that they realize what kind of equity they're sitting on and what potential that has. And this is where I said a moment ago, it's kind of the tip the dominoes type of thing. When people start to realize how much equity they have, the pent up needs and demands that they have, what their equity can do for them, that starts to really move the opportunities in the housing markets, creates more listings, creates more inventory, all of those different things. So what I want you to make sure that your clients know right now, this is a quote from Selma Hepp at CoreLogic. It says, rising home prices continue to fuel growing home equity, which at $298,000 per average borrower remain the near historic highs at the end of 2023. So going into the beginning of this year, the average borrower had almost $300,000 in equity. Now, a lot of that is attributed to the mass price gains we've seen over the past few years. But it really is over time. I'm going to show you some data towards the end of the presentation that shows how much equity people have truly gained over the past 30 years. And it's significant, it's game changing. And when they know this and they get a personalized opportunity from you, then that can really help move the needle. They have to understand what's available and what they can do with it. If they want to move closer to their grandchildren or they want to retire, all those different things. There are so many different options, but having this conversation is important. And I say that because we could all sit back and say, well, people don't really want to move right now. They're waiting for mortgage rates to go down. But a lot of times people do want to move and they just don't know what the opportunities are. And making sure that they understand that and they understand their equity can help really open their eyes to the opportunities that are there. And Americans are truly sitting on tremendous equity. So 67.4% have paid off their mortgage or have at least 50% equity. So homeowners are equity rich right now. 2 out of 3 homeowners have more than 50% equity in their home. That's a game changer. What that's also going to do is help keep, it's going to keep people in a place where we aren't going to see a wave of foreclosures. We've talked a lot about that over the past. People just have so much equity that we're not going to see that happen. So there's a lot of reasons why equity is really powerful for the market, and people need to know how much equity is available. But just showing them the data or just having someone kind of Google it doesn't make a difference. Let me show you this. This is from Market Watch, and it says you can get an idea of your home's worth through online home valuation tools on websites. The tools will give you an idea of your home's fair market value. However, these results aren't the same as a professional appraisal or independent assessment of your property's value. So what's important is that your clients hear from you. You are the person in the process that helps them understand this. They need to understand that they have a trusted advisor, that it's someone that they can work with, that you understand their personal needs and their customized opportunities. All of those different things help you present your value as the market expert. And you know that you need to do that more than ever. That is the game changer. We actually have a tool for this and Keeping Current Matters. I don't think I showed you this last time, but it's called our Professional Equity Assessment Report. We call it our PAIR template. And this is such a great opportunity for you to offer to your clients, help them understand very high level, step into the conversation. It's just a conversation starter to help them understand how much equity they have. Now, that never takes the place of, working with a lender and all those other wonderful things, but this is a way to get the conversation going so you can help them understand what their home value is worth and their equity estimate. So it's a tool that you can just pop on your computer, punch in the numbers for them, share it in a listing presentation, or just call up your clients and say, hey, would you like a professional equity assessment on your home? Yes, they do. That sounds awesome. And if you're offering this to help people start to realize the opportunities they have, you're going to see that domino effect start to move in the housing market. So really, really important to understand that your clients understand the equity they have. And, at an average of almost $300,000 per borrower, that is massive. And it's definitely something that opens up opportunities for your clients. So that's the conversation I want to make sure you have with your sellers. And the other big one that we want to talk about today is your buyers need to understand what's happening with mortgage rates. And I say buyers, but at the same time, I think what we have to remember is that sellers are also buyers. Sellers, most of the time, are also looking to purchase their next home, depending on where they're going. So this is really important information to get out there. A lot has changed even over the past 24 hours. So I'm going to bring you the latest that I have. As always, working with your trusted lender is more important than ever. And one of those things that you definitely want to do on a regular basis, because they're going to be your experts in the process for sure. This is going to give you a simplified way to talk about it and explain what's happening and why to your clients, because it's kind of the why that people don't always understand. They hear things, they hear those media headlines that can be confusing or clickbaity, and they're not sure what they mean, but they don't always understand the background. But when you can simply and effectively explain why things are going the way they are with mortgage rates, then that even more so positions you as the expert and gives you the opportunity to have really meaningful conversations with your clients who are looking for good advice and willing to pay for good advice. So let's start with demand based on rate environment. So this is a graph that we put together, and that white line is the daily mortgage rate going back to the beginning of the year. You can see we started out the year a little lower, probably about 6.75-ish right there. And we've seen volatility. We've seen some ups, we've seen some downs, and that mortgage rate has really fluctuated quite a bit. Now, where we are today, looking at what happened yesterday as the CPI came out, mortgage rates ticked back up. And they moved into really what we consider to be weak demand. Because at the end of the day, it's no secret that as mortgage rates are higher, buyer demand is lower. As mortgage rates come down, we see more buyer demand. That is, very, very general for the housing market. We saw mortgage applications tick up when mortgage rates came down into that limited demand area. So this is a pretty standard kind of 1-for-1. As rates go up, demand goes down. But what people need to understand is, why are rates moving around the way they are right now? Now, when we got together in January, we were looking ahead at the rest of the year, and it was a different landscape than where we were in February. I'm going to walk you through what happened there, and then where we are today. But the overall trajectory is that mortgage rates are still expected to come down over the rest of the year. It's just going to take a little bit more time. So call that the spoiler. But now what I'm going to do is go ahead and kind of unpack all that for you, so you have the information you need to talk to your clients about it. Because that's the game changer. When you can explain it, then your clients can understand it. So this is a quote from Forbes, and it says, mortgage rates are indirectly influenced by the Federal Reserve's monetary policy. When the central bank raises the federal funds target rate, as it did throughout 2022 and 23, that has a knock-on effect by causing short-term interest rates to go up. So at the end of the day, there's a lot packed in here, but what it really means is that as inflation is high, mortgage rates tend to be high. And so we saw inflation creep up over the past couple of years. And what the Federal Reserve is trying to do is slow the economy, bring inflation down. They're looking at all of these different economic factors that are constantly moving. And they raise the federal funds rate in this process. Now, the federal funds rate does not determine mortgage rates, but what it does is it helps slow the economy. It makes it a little bit more expensive to borrow money. So what they've been doing is raising the federal funds rate last year, year before. And then they got to the end of last year, and what happened? They said, okay, we're seeing inflation in a better spot. We're seeing the economy in a better spot. Inflation's coming down. We're going to pause our federal funds rate hikes. And so they paused towards the end of the year. And what did we notice? We noticed that mortgage rates came off kind of that 8% high in the end of the year. And they started to ease down. When they went from 7 to 6%, we saw that increase in activity and mortgage applications, and all of those different things started to happen. And what the Federal Reserve was nodding towards is we think we may actually start to cut rates in 2024. So the federal funds rate, they were saying we can bring it down a few notches next year. So when we got together in January, we were like, this is really exciting. We're seeing this trajectory. Mortgage rates are coming down. They're expected to cut the federal funds rate. Mortgage rates will respond. They'll have that knock-on effect that they're talking about here as we go into the year. And let me reassure you, that is still the goal. But what they're doing right now is biding a little more time. And I say that because what happened in February was the CPI was released, or the measure of inflation was released. It was a little hotter, a little higher than what they expected it to be. So we're like, okay, the Federal Reserve is kind of signaling now at this point towards, we still anticipate we'll cut the federal funds rate later this year, but we need a little bit more time. So when the March meeting rolled around, they kept a pause. They did not cut the federal funds rate. So we didn't see mortgage rates start to come down quite as quickly as we wanted to. So inflation was a little bit higher. So we've been kind of sitting in the spot where mortgage rates have been sort of hovering, maybe ticking up, ticking down a little bit. We call it volatility. You know, that's when mortgage rates kind of move quite a bit. And that's where we've been sitting. And then yesterday, the CPI came out again for March, and it was again a little bit higher. So I want to show you with a visual what this means and what the Federal Reserve is trying to do, and why mortgage rates are responding or being influenced in the way they are. I didn't share this visual with you in January, but I think it tells a really good story. And this is probably not one that I would put out on social media or try and walk your clients through, but it's really good context for anyone, you know, an agent working in the industry to kind of understand what's going on. But this is the CPI going back to 1970. So measure of inflation going back to 1970. We talked about what the Federal Reserve was doing is trying to bring inflation down. So in the 1970s, you can see that first peak in that oval over to the left. They were trying to bring inflation down. It was rising, rising, rising. They were raising the federal funds rate. They got to a point where they started to see it come back down. That's the first valley that you see. And they said, okay, I think we're good. And then they started cutting the federal funds rate. And what happened? It was too soon. And so inflation spiked back up. And this is where you hear about mortgage rates being in like 18% in the 1980s. Well, they had to start all the work over again, and inflation really kind of peaked. And so what we're seeing now, if you kind of fast forward over to the other oval on the right, is that the Federal Reserve is trying to do everything they can to not make that mistake again. So their intention right now in pausing their rate hikes is to make sure that we don't go back to where we started and have inflation spike again. They are walking a very, very fine line, looking at tons of economic data and factors to make sure that that does not happen. And what we heard yesterday when the CPI was released and it was higher than they thought it was going to be was we need more time. And so what they're doing is they're not cutting the federal funds rate as early as we had expected, or that is at least the intention, is that they're going to take a little bit more time to do that. So that knock-on effect on mortgage rates, kind of that side factor, is that they may not come down as quickly as we thought they would. Now, bringing you the most current information, it's really, really important that you stay on top of this because that's what helps your clients understand why they're not coming down as fast as experts had said at the beginning of the year. It's not that any data was wrong. It's that as the economy shifts and we see these different key data points from inflation to employment data, that changes the needle. And we talked a lot about how as soon as you start to project mortgage rates, you are definitely going to be wrong. That is just the nature of the beast. It's the hardest thing to project in the housing market. But being able to explain why this is taking longer, that's the game changer. And so something we saw yesterday, this is a quote from Jerome Powell. He says, reducing policy restraint too soon or too much could result in a reversal of progress we have seen in inflation and ultimately require even tighter policy to get inflation back to 2%. So basically what he's saying is we need more time to make sure that what happens over on the right doesn't happen like it did on the left on this screen right here. So really just buying more time. They need more time. They need more evidence is one of the words that was used, that inflation is easing. But ideally won't change the overall picture. Mortgage rates are still expected to come down. Inflation is still expected to cool as the year goes on. The longer term picture, the trajectory is still there. It's just going to be a little volatile and bumpy along the way. So here's a quote from Business Insider that kind of sums us up. It says, though mortgage rates are expected to go down by the end of this year, the path they'll take in the near term is less certain. Rates should ease as inflation slows and the Federal Reserve is able to start cutting the federal funds rate. If the next couple of monthly inflation reports show slowing, we could see rates trend down by the summer. So again, trajectory is still there. It's going to take a little more time and it's going to be a little bumpy. That's the volatility that we see along the way. And that's to be expected because rates don't just come straight down. That's really not how it works. We use the analogy here quite a bit that when rates go up, they take the escalator. When they come down, they take the stairs. And that takes a little bit more time. So that's really the seat that we're sitting in right now. And, what everybody wants to know is, so when is this going to happen? Another thing that's really tricky to project, but one of my researchers gave me the next few slides this morning. And I thought they really created a great visual that I want to share with you. This is data, market data that shows the expectations for when these federal funds rates will start to happen. So no change is expected during the May meeting. We weren't expecting a change in the May meeting anyway. Yesterday didn't really shift that. It's the ones later in the year that have shifted a little bit. So initially, a lot of people thought maybe March. That didn't happen. And now we were looking at maybe June. But guess what? No change is expected during the June meeting, about 80% not probable. But as we start to look later in the year, that bigger picture trajectory, there's a roughly 50% chance that the Fed cuts at the July meeting. So probability goes higher as the year comes on. They're going to have to keep looking at economic data, inflation, unemployment, all the growth that's happening in the economy right now is going to determine whether or not this happens. But right now, maybe 50-50 chance that a Fed funds rate cut happens in July. September is much more likely, 72.8% chance that the Fed cuts rates at the September meeting. So again, this is something that is a moving target. It's based on everything that's happening throughout the economy that they're weighing and trying not to go back to where they were. But it is still likely that rates come down later this year. Lawrence Yun, chief economist at NAR, says it is therefore possible to get to the 2% inflation target by year's end, even with bumps and delays. And I think what we're feeling right now is bumps and delays. And it's interesting because I'm seeing that word pop up a lot in the quotes and the articles. I was reading on this yesterday. Lisa Sturdivant from Bright MLS says kind of the same thing. During the early part of the year, expect some bumpiness in rates, meaning mortgage rates, as the new economic data are released and as more buyers get back into the market. So bumpy ride, it's volatile. It's not a straight downward path. We're going to see some ups, we're going to see some downs, but the bigger picture is that rates are still expected to come down. So one thing I want to share with you is the latest mortgage rate projections that we have from the major players. Now, I showed you this next chart that I'm going to pull up in January. And the big takeaway in January was that Fannie Mae said, hey, it could be 5.9% or 5.99% by the end of the year. And we got excited about that. And based on the economic data at that time, that was true. Now, the reality of it is that is absolutely still possible. We can absolutely still get there. The likelihood that we get to a rate below 6% has definitely gone down based on the economic data we've seen in February and March. So in March, prior to yesterday, these were the projections we had for 2024 from Fannie, MBA, and NAR. And if you look at that bottom row and average them all together, you can see that Fannie Mae kind of reforecast up by the end of the year. They said 6.4. MBA and NAR said maybe 6.1. And so averaged all together about 6.2%. And everything we're hearing right now is that this is still possible. The greater trajectory for the year is that mortgage rates will continue to come down as long as inflation shows that cooling, as the economy kind of shows the signs that the Federal Reserve is looking for, and as mortgage rates respond in that moment. And MBA projects out a little bit further and says, rates can come down even maybe into the mid fives by 2025. The blue line is actual rates going back to 2018, and the orange line is projected. And so we're not headed back to that 2.75, 3%. That was what we call the unicorn years, where things were just a very, very different time and place. But as you look forward to where we're going, probably normalizing a little bit more. And again, mortgage rates are one of the most challenging things to project. We're always looking at what's most current and what does the economy show that we can expect. The federal funds rate does not set mortgage rates, but it sure has that knock-on effect we saw in that first quote. Bright MLS also says, expect rates to come down in the second half of 2024, but remain above 6% this year. Even a modest drop in rates will bring both more buyers and more sellers to the market. And I think that's really important to realize, is that as people start to see what is normal, where are they settling, what's happening, more buyers and sellers will come into the market. Not a flood. We're not talking about, 2020, 2021, when everybody wanted to buy a home, but we certainly will see that pent up demand. We'll see people with needs changing. We'll see all of those things have an impact on the housing market. And I think the reason we need to be having this conversation right now is because people, don't understand it. And here's the other reality is people don't always believe it either. This is the percent of respondents who say mortgage rates will go down in the next 12 months. And what you can see, this goes back to January of 2023. People started to get more optimistic as we got into the end of last year, as they started seeing rates come off that 8% peak. We went into January and February and they're like, okay, this feels better. I think I see rates coming down. This data actually was released on Monday, and my research team sent it to me. I was doing this presentation actually in Maine on Monday. And they sent this to me and they're like, hey, you need to see this, that, now that 35% of people who think rates will come down has dropped to 29. So people are getting a little bit more skeptical. And so they need to hear from you, not just see it on the news, not just hear it in the media. They need to hear from you, their trusted expert on what's happening and why. And they need to be reassured that you're going to continue to support them with the most current information. The best thing you can do is give the best advice possible. And that is bringing the current data, bringing why it's happening, helping them understand where we are today, what does this mean for your plans, and how is it going to ebb and flow? And the more transparency you can have in that, and clarity and openness you can have in saying, here's what's happening and what's likely to happen, the easier it will be for your clients to navigate this with you, and the less fear they will feel about the market. Because sometimes it's just not about the number. The fear is actually about, everything they're hearing around them and not understanding it. When they understand it, that can make a really big difference. So that's the most important conversation I want you to have with your buyers, to be able to talk about that, give context. Hopefully this gave you a really good basic foundation. I am not an economist, I promise you that. But I do love to talk about the why and the how, and help people understand that to really impact the business, because it can make a big difference if people are hearing from you in the industry, and it can make a big difference for your business as well. So the last thing I want to talk about is how this will impact the housing market in 2024. There's a lot of moving parts and pieces, from, the value of an agent, how consumers perceive that, what's happening in the housing market, mortgage rates, all those different things. So let's talk about what's changed in the housing market as well. So this is the projection for 2024 total home sales. When we looked at this in January, it was a little bit lower. It was below 5 million. We averaged them all out. Forecasters constantly reprojecting. And I remember sharing with you, hey, I think this number is going to go up, and the projection is going up. Now we're going to continue to watch this, because if it takes longer for mortgage rates to come down, we may not see as much buyer demand right out of the gate. But that doesn't mean we won't have more transactions. So we're going to continue to watch this. Roughly about 5.1 million home sales are projected this year. This is a combination of existing and new construction. And we know that builders are building more homes. Builders are building smaller homes. That's where the demand is. So we're seeing more smaller homes come to the market, creating some of those opportunities that are easing affordability and other factors that have kind of been barriers for some of your clients. And what do we know about inventory? It is still historically low. This is data from Calculated Risk. And what it shows is the same week in 2023, so a year ago, we have 26% more inventory than we did a year ago. So growing inventory means that there are more options and more opportunities for buyers than they had a year ago. But if you put that into context, that red bar shows that we're not even close to where we were in a more normal market in 2019. Nationally, inventory is down. So still a seller's market for sure. Now, I want to talk about new listings and what we're seeing both nationally and in Dallas, because I think this is where it starts to get a little bit more local and helpful for you to share with your clients too. So when we're talking about inventory, we're seeing more people list this time of year this year than last year. So this is new listings in March of each year, going all the way back to 2017. And that green bar over on the right shows that there are more new listings nationally this year than last year. Now, what it also shows is that it's not as many as what we had in a more normal year. So still upward pressure on prices, but more options for buyers. If I were to show this to a buyer, I would say, hey, if you were been looking for a home for a while, there are more options right now than you've had previously. If I were to show it to a seller, I would say your house is still in demand. But let's contextualize this for Dallas as well, because it's a little bit of a different picture. And what we see in Dallas is that definitely more new listings, more people willing to list their homes, willing to move this year compared to the last few years. People are putting their homes on the market. And what I see when I compare that back to the normal years, 2017, 18, 19, is that it's returning to more normal levels of new listings, more of what you would see in a typical market. So this is going to help with affordability. It's going to be, much more normal compared to what we've seen in some of the years past. So That's a really big factor for Dallas to be able to see that more people are listing and we're getting back to normal. Now, the question is, what is inventory doing to prices? We know when buyer demand is higher than inventory available, prices continue to rise. And I shared this next graph with you when we were together in January, and it's changed. The average home price appreciation throughout the country this year is expected to be about 3.2%. One of the things that we talked about was, hey, we think this number is going to go up. And as experts have been reforecasting, this number has gone up. There just aren't enough homes on the market for prices to go down at this point nationally. So that 2% was the average in January, and it's gone up to over 3% as we average all of these together. So experts have been reforecasting up. We're going to continue to keep our eyes on this. And we're going to look ahead to the next 5 years. This has also changed since the last time we talked about it. So we look at the home price expectation survey, a survey of over 100 economists, analysts, market experts, and it shows that home prices are projected to continue rising over the next 5 years. What I see when I look at this is returning to more normal levels of home price appreciation. So normal level is typically about 4.95% appreciation. And so it's starting to moderate over the next 5 years. And I think that's a really important message to get out there, because what it also shows is that, people can wait to buy, but it's just going to cost more in the long run. So being able to kind of have our clients understand this as well is really important. So what do home prices look like in Dallas? This is from Case Shiller, and it goes back to January of 2022. We looked at this together a few months ago, and it's the same general story of home prices appreciated more than normal in 2022, and then there was an adjustment, and they kind of evened out after that, returning to more normal levels of appreciation. Now, this data is on about a 2-month lag, so this goes through January of 2024. And the reason for that is because it takes a couple of months to get really accurate pricing data. They have to kind of comb through it and make sure that it's spot on. You can look at, median listing price and all those different things. That's a moving target. That's not closed sales, actual data, but this is, and it shows that price is returning to more normal levels. Now, what might we see when you're kind of hovering at that low level, that typical normal appreciation? Sometimes you see a bar above, sometimes you see a bar below, sometimes you see a little bit red on this. So as we start to look over the next couple of months, if we see a little bit of red above or below, hovering around normal levels or neutral appreciation is not necessarily a bad thing. The key is to look at it over time and to see, what's happening and trending over time, not just 1 month kind of here and there. So we may see a little bit of that in Dallas. It really depends on the market, depends again on mortgage rates and buyer demand and all of those different things. But returning to more normal levels of home price appreciation this year. And if we compare that to normal levels of home price appreciation, again, we can see that average I was just talking about. For the past 43 years, the average has been 4.95%. And everybody always says the prices always go up and they always go down. But really, those green bars show that in every year over the last 43 years, except for the housing market crash, we saw prices rise in this country. We see that upward pressure on prices. We've underbuilt for quite some time. We continue to see that pressure. And, when you look at those red bars, we're not going back to that type of market. That was when we had a flood of foreclosures and people used their equity irresponsibly. There was a lot of things happening. And the market fundamentals just aren't there right now. So we expect to see continued appreciation at much more normal levels, even below that 4.95% over the next few years, but continued growth. And at the end of the day, we've seen a lot of highs and a lot of lows over this period of time, but home prices continue to rise. And I want to share this graph with you. I think we looked at this in January as well. This is an updated version of home price appreciation nationally in the blue bars, in Texas in the green bars, and Dallas in the orange bars. And what it shows is that over the past 30 years, over on the right, Home values have grown almost 340% essentially in your market. And like we said, there have been a lot of highs and a lot of lows, but we're still significantly farther ahead. And over the past 5 years, that was about 60%. Last year started to level out a little bit, especially in Dallas and in Texas. We're hovering more to that 2 to 3% appreciation. And the data for 1 quarter is a very short window of time. So that's where I said you might see a little bar above, a little bit bar below, but not necessarily anything that would cause concern for a crash, because we just don't have a market like that. We see prices returning to more normal levels of appreciation, which is good for your buyers. It's good for the market. It's good for affordability. It's good for all of those different things. And I have a quick story I want to tell you about this graph. I mentioned a moment ago, I was doing this presentation with a group in Maine on Tuesday. And a woman came up to me after the presentation, and she was one of the people in the crowd who was like, her phone was up the whole time and she was snapping pictures. And she's a very, she was an activator, I would call her, someone who's like, I'm going to get this done in the moment. She had texted this graph to one of her clients who's renting. And she said, look, I know I keep telling you this, but you need to see it. This is what happens over time. Home price appreciation, just going to get more expensive to buy. You know, look at the value in home ownership. I really, really want to open that conversation back up with you on renting versus buying. And her client was like, I get it. I get it. This is really helpful. Thank you. Let's talk. So when we can show people visuals, we can help them understand, we can change lives. We can help people make powerful and confident decisions. And that is mission critical. That's why we're here at the end of the day, to be the educator, to help people make these choices, to really understand what's happening and why. And when we start to think about what does this mean in Dallas as well, this graph really kind of comes to light of the value of home ownership. What we also know, we talked a little bit about this in January, is that Dallas is still a top market to watch in 2024. I know y'all hated seeing Dallas as number 2 on this list, but this is an annual survey, so I don't have anything that says you're rising up to number 1. But if you work hard enough, I know we'll get there. But, you know, still a top market to watch, potential buyers, all of those different things, pent-up housing demand. We have a really strong, diverse economy in Dallas. You know, there's a lot going on. It's a great place to have a business. You know, people are working. The employment is still strong. And when people are working, they can buy homes, they can pay their mortgages, they can do all the things that support the economy. So thinking about the strength of the Dallas economy is a big driver for your community as well. And this quote says, the Dallas-Fort Worth, Arlington area's economic growth has been a significant driver of activity within the housing market. According to data from the Texas Workforce Commission, the average monthly job count surged from 4,090,000 in 2022 to 4,200,000 in 2023, reflecting a robust 4.3% year-over-year increase, equating to 177,992 new jobs. So the economy is in a strong spot. Home prices are over time very strong as well. We're going to see that sort of downward trajectory in mortgage rates. Hang in there. There's a little bit more time that it's going to take to get there. It's going to be bumpy along the way, but it is possible, and it is still the longer term projection. And there's a lot of equity to be had. You know, homeowners have gained a significant amount of equity over time, and making sure that they understand that from you, the educator, the market expert, the person that they can trust in the process, is really the game changer. Because I'll remind you again, most agents know what's happening. Good agents understand what's happening, and great agents can explain what's happening. So one of the things that I want to make sure you do as you're going out and explaining what's happening is having the top slides from this presentation to be able to take with you. I'm going to show that QR code again as we wrap up in just a moment. But do download those top 5 slides. Use them on your phone. If you download them and then take screenshots of those top 5 slides, you will have information at your fingertips no matter where you are. I know everybody has their phones with them. They love to share pictures, show things off, all the good stuff. You'll be able to show screenshots of these as you're having those conversations with your clients. So you'll get the top 5 slides from this presentation. And let me just remind you one more time, we talked about this in January, talking to homeowners makes a difference. Having conversations, presenting your value, all of those different things makes a difference. And if you want to start to tip the dominoes, get more listings, really help move your business forward. This survey from 1000 Watt shows 64.5% of potential sellers were more inclined to sell after speaking with an agent, after speaking with you, the expert, the educator. So keep that in mind. Your conversations matter. Your ability to really get out there and show that you know what's happening. People might not always just turn on a dime and work with you right away. But if you reinforce that message of the expert and the educator over time, whether it's in person, it's on your social media, if you're doing video, all those different things, as you do that, you start to build that brand, you start to build that value that people turn to when they're ready. As we see mortgage rates come down later this year, we will have more buyers than sellers back in the market. And that's exactly what we've seen in the data today. So remember, it's more important than ever to be the educator with a relevant market opinion based upon facts. Not everybody else is out there based upon facts, but you can be. And I want you to step into that space and really be the educator, bringing the data, the information, and explaining it simply and effectively to your clients. So I'm going to pause right here. You have the opportunity again to scan this code, check out KCM, download the top 5 slides. We have so much more to offer. If you want the video app, that's going to help you simply and effectively put context in your content. All that stuff is right here for you. All right, I'm going to pause. We had a moderator coming back?
Kate, it's Pete. Hey, you rock. Thank you.
Thank you.
That was awesome. So you're telling us there's hope.
I am. I don't want to say sunshine and rainbows and unicorns. I did say unicorns earlier, but that meant something else. But, there's definitely hope. And I think if we stay on top of what's happening and understand it, and it can explain it, that it's not as scary and we can get through anything for sure.
Cool. So do you have time for a couple questions if they have any? I've seen a couple pop up in the chat. Does anyone have any questions for Kate that you'd like to ask before she's gone? You can just hop off mute and ask if you want. No questions? So I did see one. There was a question about when the data was done. It was one of your first slides, and it was a survey taken about the realtors, about their, do you know when that survey was taken approximately? Was it this year?
It was this year. Yeah. I don't have the exact date, but this came out just ahead of when the NAR settlement was communicated. So it was very fresh information, just showing that no matter what's happening, people really value an agent for sure.
Cool. I saw someone else talk about they're on their Zoom phone or on their phone on Zoom. Do you know how they can access the link if they're on their phone?
Oh, right now?
Yeah, they can't take a picture of it on the computer to get the QR.
I will go ahead and make sure that John has the link as well. So I can send it back to him and Diana, and then we can get that out to everybody.
If you take a screenshot of the picture on your phone, and then when you go back to the picture in the bottom right-hand corner, there's a little button. If you click that, it'll open up the link for you to click on. I learned that the other day on how to do QR codes through phone. I had to.
Cool. So okay.
I feel like I should have known that, but thank you for the reminder.
Yeah.
Does anyone have any other questions? I'm just shooting some that I had and that I saw. Does anyone have any questions that they want to ask before we let Kate go? We won't get her for another, a year. So
hey, I got something. Just an observation. When you were at the big event, it was the year of the 5s, and I was really hoping for the year of the 4, 5, 6. So it looked pretty darn close, except for appreciation just decided not to accommodate the rest of the numbers. So it looks like the year of the 3, 4, 6. 3% appreciation, 5 million homes sold, and 6% interest rates, or 3, 5, 6. So
yeah, it's a great call. I mean, I think this is a good example of why we stay current with the data. The best thing we can do is bring you the most relevant information we have at that time, knowing that it changes. That's why it's so important to kind of to follow along, because this stuff is moving quickly. And, you know, when we looked at, you mentioned price appreciation, we looked at price appreciation in January, and the average of the experts was saying 2%. Now, to be up to 3% now, that's great progress, because what experts get better and better at as the year goes on is reforecasting and reforecasting. So our initial assumption on prices in particular was, we think this is going to continue to go up, and that is still what we're seeing. So there just aren't enough homes on the market right now for that to like significantly go down. We're seeing upward pressure on prices still.
So what I heard right there, to reiterate it or re-say it, is price appreciation ultimately delivers total appreciation. It's the influence of the average sales price, for instance. Did I understand that correctly?
Sorry, say that again.
Price appreciation of going from 2 to 3 ultimately affects overall appreciation.
I'm not sure I know how to answer that question, but
Okay.
it is, if it helps, it is cumulative over time. So as homes continue to appreciate through the year, we see that appreciation grow over time. And so as experts relook at it, and they say, what's happening with inventory, what's happening with mortgage rates, what's happening with buyer demand, they just continue to reforecast as the year goes on. So when we put out the forecast in, you know, October or November, everybody's like, hey, where's the year going to end? We're that much closer to that.
Cool.
Yeah.
Thanks, Michael. Do y'all have, anyone else have any questions? I don't hear any. Okay, so before everyone gets off, I'd like for them to do one thing for me. Go into Instagram, and I want them to open up or search for Keeping Current Matters. We need to keep current, and we need to know what's going on. So please go into Instagram. You can search for Keeping Current Matters and follow Keeping Current Matters. Okay.
That's awesome.
Kate, I looked at yours personally, but it's private, so I don't know how you feel about that. So
you can send me a request.
so,
Yeah.
But you can follow Kate as well, but definitely follow Keeping Current Matters. I actually subscribed to the KCM app, and it was awesome. And even as a lender, you know, we can go in there and record cool videos, and it helps you do it. It does all kinds of cool stuff. So it's an awesome tool to have. So yeah, y'all should check that out. The other thing, and I'm going to pass this over to Natalie here in a minute, but please go in and search for, in Instagram, SFMC Home Tours. Okay, and follow it. Now, we still have a few of us on the call. Natalie, do you want to hop on and kind of tell everybody what that's all about?
Yep. Hopefully everybody's got it pulled up and you can see what we're so excited to talk to you guys about. But essentially, Service First is creating a content library for realtors to showcase and highlight, you know, builder specs, builder models all across DFW. Essentially, what you're going to see is that they're going to put new homes every week onto this website or onto Instagram. You can access it one of two ways, and it's designed for the realtor, loan officer, builder rep to just grab this professionally made reel on these awesome houses and post them to your social media and brand it like as your own, as if you created the content. And so it's really like connecting our realtors and our builders. I think there's so many unspoken or unrealized benefits with that we're going to see on this. And it's like with the NAR ruling, you know, we all think new construction is going to be a safe haven for realtors. And so it's a really good time to become like an expert with new construction. So I just think it's awesome. If y'all look at it, I don't really know anybody that says that they love social media. Everybody says it's hard, but they know they need to do it. So this is just a complete layup to have these awesome reels that are already edited that you can just snatch as your own. So
cool. That's awesome, Natalie. Yeah. I mean, I don't like doing videos, but these are like, got music to them and everything. You can just put it on there, put your brand as a realtor and post it. So it's awesome. All right. Well, that's all I got. There's all this is all going to be recorded. And I think our website changed, so it's www.thebigeventdfw.com now. And all of these recordings are going to be there. So you know, we've got Baylor, we have Kate, and then next month we have Chelsea Pikes coming back. And hers will be on there as well. So try and be looking for the email that will be sent out to join that call as well. So
Hey, Pete, I'm gonna add one more thing real quick about
Oh, yeah, sure,
SFMC
Joey.
Home Tours. In the chat, I included the link to the Instagram page. Just go online and follow it. But the magic for SFMC Home Tours happens at sfmchometours.com. That's where you can go download the content without any logos, without any promotion on it, and literally post it as if you created the content yourself. That's the biggest delta that we see. A lot of agents tell us that they want to be more involved in social media. They have a challenge from a time perspective about going and creating content. So we thought, what if we made it for you? And so you can go online and you can find a library of that. In the next 30 days, you'll see over 100 homes that you can go online and choose to post as your own. So I'm going to put the link to sfmchometours.com in the chat.
cool. Thanks, Joey. So that's all we got. Anyone else have any last comments or anything they want to talk about?
I do.
Hey, Kate, they're still with us.
Thank you again. Yes, I'm still here. Sorry. Thank you again. This is really, really fun. I can't wait to see everybody again in Dallas, hopefully next year. And I just want to double down on the personalized content. If you are looking for that with Keeping Current Matters, the link here will send you the same type of thing where you can create your own videos. It is easy to use, don't have to have technology. It's all done for you, and you can personalize it. So when Chelsea comes back next month, you can tell her you've put context in your content, and I think she'll be really proud.
You're awesome. Kate, I do want to thank you so much. I mean, spending time with us today. This information really is invaluable. And, you know, hopefully our next meeting is going to be rates are down. They're great. And we're
Yeah.
going to be just going to town. So, well, thank you. I appreciate it.
Thank you. Have a great day.
All right, guys. See everyone later.
Bye.
Bye.
Bye.